Things continue to escalate in the Middle East. Trump just threatened to obliterate Iran's power plants if the Strait of Hormuz isn't opened in 48 hours. Iran responded by threatening to attack U.S. energy infrastructure across the Gulf. Oil prices are spiking, U.S. warships are being deployed, and energy refineries are burning. And in the middle of all this chaos, gold, the world's safe haven asset for the last 5,000 years, just had its worst week since 1982. It's down over $500 in just 5 days. That's not a dip, Peter Schiff, that's a collapse. And here's what nobody on financial TV is asking. If gold can't hold a bid while the world is literally at war, then what does that tell us about where money is actually going? Because at the same time that gold has been crashing since the Iran war started, Bitcoin is held stable at 70K. Bitcoin's lack of explosive growth makes sense. Gold's does not. And understanding that difference might be the most important thing you can understand right now. This is Dante Cook with Bitcoin Simply. Let's go. Let me put this in perspective for you. Every major gold crash in history has happened for a fundamental reason. 1982, the Fed hiked interest rates to 20% to kill inflation. It was a tightening cycle that led to dollar strengthening, which obviously hurt gold. 2013, the Fed signaled tapering. The easy money from the great financial crisis was over, which was bearish for gold, and gold crashed. In 2022, the Fed aggressively hiked rates. The real yields surged, which was bad for gold. Now, to March of 2026. Wars escalating in the Middle East. Trump is threatening to obliterate a sovereign nation's infrastructure. Iran is threatening to shut down one of the most important shipping lanes in the world. And 20% of the world's oil supply is hanging by a thread. Inflation forecasts are rising. U.S. federal debt just crossed $39 trillion for the first time, up $2 trillion in 8 months. Every single one of those signals is textbook bullish for gold. And yet, gold just had its worst week since 1982. There were $6.3 billion in outflows of gold ETFs in March alone, the single most in a month since 2013. 3 consecutive weeks of declining holdings. 62 tons of gold vanished. All gains from 2026 out the window. So what's actually happening? Well, there's only 2 explanations. Either something is deeply broken in the gold market, or the world's assets are actually starting to rotate. I think it's both. Gold isn't the only thing selling off. Equities are under pressure, and the whole market looks like it's starting to crack. Which leads to the point, people aren't selling gold because they don't believe in it. They're selling it because they need cash. And it might be because private credit is starting to crack, and there's been actually zero job growth.
The thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance.
Businesses can't accept capital, consumers are stretched, and the government has one move left.
You still need a 10-year plan to figure out how to beat inflation and survive in a multipolar world. And the only thing I know about that is hard assets, physical assets. The next crisis is a self-custody play, definitely. Custodians versus self-custody. That's what goes wrong. There's many different theories on that. The only strategy is the big print in the West. Larry Lepard wrote a book on that. There'll be a bigger print than COVID. It's the only strategy. There's no other thing. There's no way around that. And everyone needs to just understand that fixed assets is the way to solve that. And we enter into a world where your government might confiscate your assets, or they might tax your assets in order to stop you from leaving. And so everyone just needs to work on the sovereign side. That's solvable. And you need a 10-year plan to do that, and you need to start today. Don't say it's too late. It's not too late. You need 10 years to really plan for that.
There's no other strategy. The only path forward is the big print. This is exactly what's laid out in Larry Lepard's book right behind me. And when this happens, this presents a great opportunity to buy hard assets. People sell what they can sell in these times, not what they want to sell. In this structural setup, looks really good for Bitcoin.
So since the war started, Bitcoin is, I think, the best performing asset by a good amount too. Gold has now fallen sharply, and I think it's down 8 or 9% since the beginning of the war, and Bitcoin is up 5 to 6 since the beginning, which is an interesting dynamic on itself. Now, I said it last week, I'll say it again. Some of this is just mean reversion, meaning gold had outperformed significantly. But I do think there's a couple things going on with inside the Middle East. You've got the UAE focused on liquidity for the banking system. So they're already having to pump money into the system. We do have an inflation issue that has picked up. And even though gold is a good, theoretically, inflation hedge, not if it means rate cuts are going from 0 to up. Bitcoin already discounted this, so it already got ahead of it. If we're going to have a recession and private credit is going to become a bigger issue, then I'm going to go back to my thesis for Bitcoin, which is they're going to have to do something to provide liquidity to the system. If you can't get the oil price down, I hate to say it, guys, but if private credit is worsening, they're going to have to do something for private credit. I wrote about it last week. I'll say it again. This is my belief that the 1970s are the most important thing for Bitcoin, not in the fact that inflation in the 1970s was high. We all know that CPI got up to higher levels than in 2022. Then it came down, then it went higher again, then kind of went sideways. It just never died. We could be in a 3-year period where now that oil prices are no longer sitting there, and I think we're in a commodity bull market, where we could have headline inflation stay high, core inflation for services could come down because of the deflationary pressures on AI. The deflationary pressures on AI are crushing software, and they're crushing anything built on code. And like I've said, if you at the end of this year are sitting there and you realize that the S&P 500 was unchanged or down slightly, and next year there's not a lot of hope for anything changing because we're still in a commodity bull market and people are like, what's going on here? We've got a credit problem, we've got this. Then all of a sudden people are looking for growth assets and they look around, and I think Bitcoin will be the best performing asset this year when you put it in the growth bucket. And if that's the case, we already have the momentum. So I'm going to keep pounding the table that the best thing for Bitcoin is a continuing credit problem, which I don't think can be resolved on itself. And at the same point, having a commodity bull market, which is based on scarcity, and then a shorting of abundance, which is based on these growth assets. If all of that plays in,
Bitcoin's like uniquely positioned.
it's uniquely positioned.
Here's one of the most bullish signals in Bitcoin that's happening that no one is talking about right now. Bitcoin mining difficulty just dropped 7.76%. Miners are feeling the squeeze. When the price drops, less efficient miners have to go off the network. They can't cover their electricity costs and they shut down. And here's why this is bullish. When those weak miners exit, the network self-corrects. Remaining miners become more profitable. And miners are typically the strongest hands in Bitcoin. We've seen this setup before. Whenever mining difficulty drops this fast, this hard, and this sharply, it typically marks a point in Bitcoin where we're near a bottom. The accumulators are still continuing to accumulate. Are you still bullish on Bitcoin? That's the question of the week. And according to our polls, the answer's in the data. Quick break to talk about something important. If you've been stacking Bitcoin for any amount of time, you know the biggest mistake that you can make in your Bitcoin journey is selling because you have to. Instead of selling, have you ever considered borrowing against your Bitcoin stack? That's what Ledn exists to do, provide Bitcoin-backed loans. You keep your Bitcoin while accessing the liquidity that you need. No selling, no tax event, just using your Bitcoin as collateral. In a macro world where things are uncertain, the last thing you want to do is sell your hardest asset to cover a short-term need. Go to learn.ledn.io/simply to get started. Let's go back to this oldie but goodie from the last time that the US dollar was weaponized against another country. Vladimir Putin, the leader of Russia, a country who has been sanctioned, kept out of the global financial system, and had their assets frozen on SWIFT, had this to say about Bitcoin in times of calamity.
Биткоин кто может запретить? Никто. А использование других электронных средств расчета кто может запретить? Никто, потому что это новые технологии. И чего бы ни было, чего бы ни происходило с долларом, эти инструменты так или иначе будут развиваться, потому что все будут стремиться к тому, чтобы снижать издержки и повышать надежность.
Who can ban Bitcoin? He says, nobody. Let that sink in. Bitcoin is the only asset that nobody can shut off. You can shut off the Strait of Hormuz. You cannot stop Bitcoin. Iran is living that reality right now with their own financial system, and the rest of the world is watching. They're all asking the same question. What's the one asset that nobody can ban? And though gold is unbannable, why are people selling right now? A drop that large that fast has only happened once in almost 45 years. The answer is the same as when Satoshi released the white paper. Bitcoin is the only asset that cannot be banned, and that's why it's underpriced.
Gold is heavily overvalued. The stock market is heavily overvalued. But Bitcoin is very attractive at these prices. And so now, I don't know how much money necessarily is now chasing like this attractive investment, because it also feels risky. We had some of the quantum threats. There's some uncertainty, and then we have all this conflict, and then gold is actually performing very well, and Bitcoin is not. And so a bit of loss of confidence, like, oh, is Bitcoin really going to do what it's going to do? But if you really look at the fundamentals, Bitcoin is actually exactly doing what it's going to do. And so I'm super optimistic actually about Bitcoin, right? Like, okay, I'm pessimistic about the next couple of months. I even think we don't necessarily have to get that like lag down. As I said, there's passive flows, and so maybe we don't. And also the reason the business cycle it has a bit of is extending, maybe that also will have an impact on Bitcoin and will bottom early, or this was already the bottom and we started kind of gradually moving up. But if we look at the on-chain charts, and for example in this one, we see such a similarity to previous bear markets. We see these red lines, like the amount of short-term profits, which is shown here. It's hard to neglect. Like it looks exactly like a bear market would, and so for me, unfortunately, also then the probability is the highest that will continue exactly as how a bear market usually has functioned in the past. Doesn't sound that attractive, but I think it's also a big opportunity because we basically have another few months of checking extremely cheap sats, and Bitcoin will turn around again. I mean, Bitcoin is not going to zero. It's literally the only hope we have on a better future for humanity, and to even live in peace with AI and to be all and so I think it's Bitcoin is already heavily undervalued. In my opinion, Bitcoin is worth much more than 200K, and probably will go into the millions. But yeah, we have to move through this phase. I mean, hype is gone. We have seen this every cycle. Bitcoin has to form a bottom. That takes time. There's a time factor to this, and so it will take a couple of months. But yeah, those months are an opportunity as well.
Last thing about liquidity and where it could be rotating from and why Bitcoin is holding steady. It's rotating out of gold that we know, but it also could start to rotate out of AI and data center. OpenAI's data center pivot this week sparked a lot of concern. This is exactly what Jordi Visser and Arthur Hayes have been talking about. AI is supposedly destroying every moat of every business. But what if the AI models themselves are actually a commodity? All that capital that's being poured into AI, the data center capex, the GPUs that are being put into those data centers, the hyperscalers spending unlimited amounts of capital, what if that flow starts to dwindle? It has to find a new home. It will not disappear. It will simply rotate into other hard assets, assets that cannot be commoditized. Bitcoin is scarce, neutral, and impervious to AI disruption. People are going to find that out sooner than later. When the AI trade matures, it's showing that it's not going to flow into gold, but into the asset of the future. Before we close, here's a quick reminder. If you're going to own Bitcoin in this environment, you need to actually control the Bitcoin, not outsource it to banks or somebody else who says, trust me, bro, I have your Bitcoin. Self-custody. That's where the Bitcoin way comes in. They help individuals learn how to store and secure their own Bitcoin. No exchanges, no third parties, just you and your keys. Visit thebitcoinway.com/partner/Dante, DANTE-cook to get started. Let me bring this full circle. Gold just had its worst week since 1982. Not because the macro environment turned bearish, but it turned chaotic. Every signal that should have sent gold at 6,000 sent it down to 4,400. The US is $39 trillion in debt right now, and the only thing that's going to solve it is printing more money. Austerity is not an option. There's going to be unlimited demand for an asset that no government can freeze and no government can ban. As Putin says, no one can ban it. As Saylor says, it's at a 99% discount. The data says miners are capitulating, but individuals are continuing to stack. The world is chaotic right now, but that's the actual story that Bitcoin was born out of. The question isn't whether Bitcoin survives. The question is whether you are positioned to capture the rotation out of gold into a firm and safer store of value for the future, which is Bitcoin. This is Dante Cook with Bitcoin Simply. And if you want to do more than just hold Bitcoin, this is a great time to get into Bitcoin mining because your dollars that you invest in SAS Mining, the leader in Bitcoin mining for you, well, they go a little bit further. They handle everything, the miners, the hosting, the maintenance, and they send Bitcoin directly to your wallet. You're not just buying Bitcoin, you also get some tax advantages and you secure the network. Check out SAS Mining with the QR code on the screen. This is Dante Cook with Bitcoin Simply. Happy stacking.